Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I am here to bring you some trading levels for the week of November 13th, 2023. I intend to cover the major broad market indexes and their ETFs, as well as the bonds. As I'm going through this, I invite you to, pause the recording, take some screenshots, and plot these levels for yourselves, and see how they, how they match up with your perception of the market there. Before I get going here, obviously the usual disclaimer: everything that I'm going to present to you today is for informational and educational purposes only. Precision Trading Labs, we are neither financial advisors nor money managers. All right, so let's get to the charts here, and I'll actually start here. Actually, here's Netflix. We'll take a look at that in a few minutes, but I'm going to start with the SPY here. And so here's a daily chart of the SPY. So here's where we closed on Friday, the 10th. So we closed at around 440.5, and this obviously capped a very, very, basically two bullish weeks ever since we had hit at the very end of October, right before Halloween. We had actually entered into official correction territory. Right here from this local high that occurred in August. We were now down about 11% from that. And so that, of course, qualified as an official correction. Anything over 10%, of course, is considered to be an official correction. So that was, of course, a big in the financial press on CNBC and Bloomberg and everything, that we were in correction territory. But ever since we hit that, we essentially have bounced off, and we've now recovered about over 7%. So this has been over the course of a couple of weeks here. So obviously this was a very, very bullish action here. And in fact, prior to that, I had identified in a recording from a couple of weeks back, on the 27th, in fact, when we had actually hit that low point, I had identified this area right here as what I refer to as iffy support. This was, kind of some support, but it was really not validated, because it was more like a tested demand zone, which I'll explain in a second, where price had based here, popped, and then came back again. So at this point, I kind of characterized this as iffy support. As it turned out, it was kind of it was accurate. I was certainly not prepared to trade off of it, but it certainly turned out to be valid support. So this is where we are now, though. Right here, we're looking at above here. This is what we refer to as a supply zone. This is an area where price came down, based in here, with closes very close to each other, and then notice that very, very bearish move, a gap, and then another bearish move out of that. So this was an area where supply and demand were in balance, and then essentially they went out of balance at this point. What you had here is essentially an exhaustion of buyers. Buyers and sellers were in agreement within a relatively narrow range for about, let's say, 2.5 days within this. And then at this point, there was nobody left to buy anymore. The buyers essentially left the building. And so for these trades to have occurred, sellers essentially had to run down the price chart until they encountered willing buyers. So that's the kind of the narrative of what went on here. So now when price comes back here, there's the expectation that there are still sellers that are effectively wanting to sell, never got the opportunity to do so, because the price was, basically it stayed here only a relatively short amount of time. And because it left with such urgency, there was this kind of very quick exhaustion of buyers. And so when the price returns here, we'll be looking for basically for this level to stop price from rising, and in fact to actually then push it back down. Not suggesting that that's the end of any sort of bullish move, but in the short term, this would be a highly likely place that we could expect to see some downward price action. Okay, and so we characterize that as a supply zone. So here's the explanation of what I just kind of went through in summary. It's an area of expected downward price pressure. It's created by a period of brief consolidation and then a clear, abrupt exhaustion of buyers in the range. And then it's followed by an energetic bearish move as sellers move down the price chart. And so that was everything that I described there. Okay, so this is a supply zone. Over here on a slightly lower time frame, let me just move this over here. If we look at a 2-hour chart here, this essentially represents a demand zone, and it's the exact opposite of this narrative here. Okay, it's an area of expected upward price pressure when price returns to this again. Okay, and that was created by, rather than an exhaustion of sellers here, an exhaustion of buyers here, this was created by an exhaustion of sellers. Okay, nobody was willing to sell. And so essentially then basically the buyers had to run up the price chart in order to identify and meet up with willing sellers at higher prices. So of course it's the same exact narrative of this, but in reverse. Okay, and so if I turn this into if I move this to the 2-hour chart and let that come up here, we can see right there, that's that level that I just identified right here. But here it is in the 2-hour chart. Okay, and if I blow this up a bit, price comes up. Okay, it consolidates. Okay, it comes up. Notice that pause in there with this indecisive red candle. And then notice that pretty bullish candle that comes out of there. And then notice, of course, then there's a gap. Okay, over the next day there's a continuous march up there, and then there's another gap, and then price continues to go from there, and then it pauses there. But that's a very energetic burst. So this is a demand zone. Okay, and so when price returns here, there's the expectation that we would actually get a bounce out of that. Okay, and so that's kind of the narrative about that. And then also within here, there's also this is also in here, and this is more or less kind of a 1-hour demand zone. This would probably be an area here where we could expect a bounce, but it would probably be a rather short-lived bounce. And so this would be something more for kind of a scalp or an intraday trade within there. Okay, and so this would be, if I put on a label here, you can see that this level is sitting at around 430 to around 428. That's about a 2-point range here. So since we're sitting at around 440 here, for us, the next area that we would be looking at for any sort of bounce that we would consider to be a high probability trade would probably be in this 428 to 430 area. And then for a longer term swing trade, that would, this would probably be the area about 10 points further down here. Okay, so that's the narrative about the SPY, and again above here, that's the range where we would be looking for a short trade would be in this 442 to 445 area. Okay, so that's the SPY. If we turn to the Qs, we'll see here that there is actually some symmetry there, where basically the charts more or less kind of line up here. There we go. And so if I go back to the daily chart here, okay, you'll notice that right here, the Qs are right here on the doorstep of this supply zone here. Now, I would not be racing necessarily to just automatically hit the sell button or to buy a put here. But I would probably be waiting for price to kind of drill into this area a bit and then show some signs of rolling over, and then utilize that level and and effectively wait for there to be some confirmation that there is a reversal within this zone, and then place some kind of bearish trade. And I'll describe that in a minute or two. This is essentially a supply zone here. Same narrative as before that I described on the SPY, a rally, a base, and a drop here. This was tested once briefly, but the odds are that this is probably a valid level, and we're probably going to see price roll over from here. But again, I would not automatically just do that here. First of all, this was tested once, but secondly, this is after a prolonged energetic move up here. And so as a result, this was, a rather robust 2 weeks here. So I would just not automatically short here, but I would wait for this thing to show me some evidence that it's going to roll over. Okay. Right here, we're in the vicinity, of course, of also the 52-week high. And so that's to be taken into consideration as well. Right here, we're on the doorstep of the supply zone. And then again, we're about 2.5%, about 10 points away from the 52-week high at around 388.5 here. Okay. So that's the level here. I don't really see anything great in terms of going long here, except for we could break this into the 2-hour chart, and we would probably see more or less the same things that I showed you on the SPY, and those are kind of sitting right in here. Okay, and so but really there's really no quality demand, at least on here. But in terms of until I guess really down here, right here would be an area where we might actually, but that's a fair distance down here. And frankly, I'm not rooting to see this at any point soon. So I would be patient and wait for price to return. And maybe if it comes off of here, it would then create some kind of demand zone somewhere in here. And then that would be where we would express a trade out of that. Okay. So that's the Qs. If we look at the Russell, of course, it's a tale of two markets. The Russell has just been miserable. So all last week, when the Qs and the SPY were nicely rising, this is what it was doing last week. Okay, and in fact, this came right up to an area of supply here, and so in fact, that was an area where we actually had our subscribers had a nice bearish trade out of this, and I'll talk about how we express the trade in a minute or two. So right here, though, we can see from the close on Friday, this is where we are now. At around 169. Right here, there's an area of support below here. This is not demand because of the fact that the price has been back here any number of times. We can see from that pivot, it was back here once, it was back here twice, it was back here a third time. And so this is not a demand zone here. This is this is support, but it's beaten up support. So I would be not at all surprised if in fact this thing started to push down. I would actually almost be inclined to fade this level because of the fact that it's been hit so many times, and every time a level is hit, it's just kind of chewing up whatever expectation you have for price to pop. I just think it's less and less likely the more often price comes back to it. So this area of support is down about 2.5% down, so only about 4 points down. So we'll be keeping an eye out for that. And then if you do happen to get a recovery on the Russell, that's a long way up here, but that's the first clean area of supply up here. Lastly, I'll take a look at the bonds here. The bonds, of course, have also been miserable. They did have a rally for the last week or so. Last week, a week and a half. So here's where we are now. There's really no clean demand until down here, and so that's about 4% down, and the nearest clean area of supply is about 5% above. Okay, and so that's where these regions are here. And again, that same narrative. There was an exhaustion of buyers here. There was an exhaustion of sellers here. And again, the area of consolidation, and a very bullish move here and a very bearish move there. Okay, so that's what we're looking at on the TLT, which of course are the 20-year bonds. That's this is the ETF of the longer term bonds, 20-year and beyond. Okay, we take a look at some popular symbols here. Here's Apple. So Apple here, we have a nice area of supply here, a rally at base, and then notice that very, very bearish move down there after that brief consolidation, getting to the exhaustion of buyers here. And so that's less than 1% up. And then this other area of demand here, this is somewhere in the territory about 4 to 5%. In fact, I'd probably be inclined more actually to probably draw it more like that. So right there, that's about 5% up. Okay, so there's that area of demand there. Excuse me, of supply. where we would express a bearish trade. And then right here, this is an intraday daily zone. Excuse me. This is a zone that's kind of in between two more extreme zones. I'm always wary of kind of these in between zones. So this might be good for an intraday or kind of more of a scalp trade. But we'll see what transpires in the coming week. Okay, but these are really this quality level of supply right here, and this is a 2-hour level, but it's also at the extreme of a swing here, and so I kind of like that as well. So that's about 5% down, and this is about 2 and then about 1% high above. So this is kind of where we are in terms of what I'm looking at for Apple. Taking a look at Google here. Here was an area we had identified a couple of weeks back. And so we, in fact, our subscribers actually had a really nice trade that came out of this level right here. From right here, there was a drop, a base, and a rally there. When price came back here, we ended up getting a pop, and essentially they kind of rode it from here to here. And there were different ways, depending on what our subscribers' preferences were, there were different ways of expressing a trade out of this demand zone. Right here are the kind of brief notes here. So, of course, the most straightforward way is to simply just buy the stock. Okay, so we refer to that as, of course, plus S. You could also buy a call, so we have our guidelines about buying a call, about buying a sufficient amount of time, and where we place our strike, depending on how aggressive you want to be. In terms of buying the call, with how aggressive you want to be with respect to how much delta you want to buy. And then also a couple of other simple strategies. One, of course, could buy a bull call vertical spread, where essentially you're buying a call and then selling a higher strike call in order to reduce the premium and essentially create what I refer to as a gentler trade. It'll have obviously lower delta because you're buying one option and selling another against that. So essentially it becomes a gentler trade. So you might buy an in-the-money option, an in-the-money call, let's say, or like an at or a somewhat in-the-money call, and that might have, let's say, a delta of about 60. But if you do a bull call vertical spread, then it becomes a gentler trade, and then you're going to be, the premium will be lower, and you'll also have less delta. Let's say maybe 30 or 35 or something in that territory. Okay, so that's the bull call vertical spread. And of course, the other way one could express a trade out of this demand zone would be to collect credit by doing a bull put vertical spread. Okay, and that entails, of course, selling one put and then buying another put beneath. And then by buying that put beneath, as opposed to just selling a naked put, that allows you to define and control risk. We obviously go into all of that with our subscribers. So those are essentially the four core ways one expressed a trade out of this demand zone here. Again, so our subscribers again had successful trades based on that. Okay, if we take a look at Facebook, Meta, still have not gotten used to that. Right here. This is where we are now. Meta is actually sitting right here. This blue line here, represents its 52-week high. Okay, so in a sense, it's outperformed a lot of the other tech stocks because this is actually sitting at its 52-week high. Lots of other symbols, of course, are sitting below. So right here, this is an area of demand right here, where there's this pullback, a little consolidation, and then the pop out of there. So that's about 4% down from where we closed on Friday. And then above here, this is an area of resistance that goes back, obviously, beyond 52 weeks. If we go back here, we'll see that here was an area of resistance here. Price came up here, popped in here again, dropped out of here again, came up, dropped out of here again. So this is not fresh supply by any stretch. It's resistance, but again, as I said a few minutes ago, I'm always a little wary. The more often price comes back, the less likely it is to respond. I think of it almost like a cement wall. Every time you take a sledgehammer to it, it weakens the wall. And to some degree, that's the way resistance functions as well. So anyway, those are our levels on Meta. Take a quick look at Netflix. Here's where we are. We were sitting here. We're actually sitting in the middle of a supply zone here now. I would definitely not take a bearish trade until something proves to me that price is going to roll over here, since we're already in this level. So we'll be watching the opening tomorrow, and we'll see how that functions. And of course, we'll also get a preview tonight when the futures open. If we get, if the futures open red on the major market indexes, then it's quite possible that Netflix will be inclined to roll over at the open as well. But we'll obviously see what it looks like. The futures, the equity index futures look like tonight, and then of course we'll see how that carries through to the pre-market tomorrow, and then of course we'll make a decision at that point about potentially expressing a trade from the supply zone or not. And then down here, of course, here's a level, a level of demand where if we did get a pullback, this is where we would express a bullish trade. And lastly, we'll take a look at our buddy Elon and Tesla. So here's where we are now. Right here, this was an area, in fact, few weeks back, earlier in this fall, where we had actually had a trade that came out of this daily demand zone here that I had left up here. So right now, though, in terms of what I would be looking at, there's really nothing I would be looking at potentially the short. This area right here, this is an area of supply here, but to some degree there was really no follow through from it, and so I'm always wary when there's really no follow through from here. Price could come up and then get pushed back down again, but I'm a little wary of that. And so really the next clean area of supply is up here, but that's way up. That's 16-17% up. So there's really nothing that I would consider to be a really great trade for Tesla. Right here, this is the next clean area of daily demand here. And again, that's a distance down. Right here, this is an area of tested demand. There was a rally, a base, and a rally here. Price came back, drilled into it, and then we did get that bounce. When price comes back here again, though, I don't expect this to hold. And that goes back to that whole cement wall sledgehammer analogy that I used a couple of minutes ago. So I might actually be inclined to fade this on a breakout. The only thing is, if you did get a breakdown from here, right here, there's an area of tested demand. So, fresh demand here. So there really wouldn't be much room to run. So this is one of those things, I'm just not in love with any sort of trade really on Tesla in the short term. Now, other people, of course, will have a different opinion. And that's, of course, what makes trading the interesting thing that it is. But for us here at PTL, there's probably nothing much to look at on Tesla until some better levels form. So at any rate, that's what I got. What I would like to leave you, though, is if you would like to learn a little bit more about this whole supply and demand concept, I would invite you to click there's a link in our in the YouTube in YouTube. Click that, and we can set up a brief call, and I'd be happy to tell you a little bit more about supply and demand, as well as give you a little rundown of what we do here at Precision Trading Labs. And also, please subscribe to our YouTube channel as well. So at any rate, that's what I got. Thank you for the privilege of your time. This is Mitch Firestone with Precision Trading Labs, and I will see you next time. Take care. Bye-bye.